What's up, guys? For this video, I'd like to ask you guys to like, comment, subscribe. So today we're going to be looking at the stock market, and pretty much generally, everything has been going crazy this past week. Everything has been going up a lot. Mainly SPY, mainly literally every stock has been going up. Right now, everything's kind of red. I think everything is going back to like regular pricing where people actually estimate the stocks to be instead of pumping the market like it was earlier. So this whole week, look at Bitcoin. Bitcoin has been going up a lot. And we basically had, let me see what's actual news here. There's a couple things going on with Bitcoin, XRP, um, court ruling, also the BlackRock trying to make a crypto ETF, which is interesting. That's why Bitcoin has been doing crazy. It's pretty exciting news, but not the only thing we're looking at because we're looking at the general market. We're also looking at SPY because I do have a credit spread on SPY, which right now is doing pretty bad because I try to make these credit spreads as safe as possible. It's still reasonable that we could actually make profit on this, but currently we are down a lot of money on this contract. We are currently down roughly $368, which is not fun because we have made on this we have made $96. So we are at a pretty big loss, which is not fun at all, but it's okay because we have our spread at 456 and SPY is not at 456 yet. It's at 450 and has been up to like 451, has not passed that yet, which I'm hoping it doesn't go past 451. If it does end up going to 454, 455, I will think about selling for a loss just because I'd rather take a loss than lose the whole amount of money if it goes above the price. We still have 2 weeks to wait for that, so I'll explain these credit spreads pretty in the pretty basic terms. Usually you do sell call or you sell a put, and then you would buy also a put and a call. I think I explained these before, but I'll explain it in detail. Let's do like saying 7 days out. So it's not too far of an like expiration. I typically do a month out, so we could technically look at a month out. We could do August 11th. So if we are gonna sell calls, because SPY has been going up, we will say calls because can SPY go higher? Probably, but we are at a lower risk of taking a call, I believe, at this point. So pretty much, um, we could even do something like I don't like how they are 200 separated price here, but we could do sell call, buy call. That means we would get paid $17 for this contract. We are going to be paying, for example, for this contract, we'll be paying $200 per this contract, per each one we do. So usually I like to do half of my portfolio or not half. I like to do 10% of my portfolio. So I would do 16 contracts at 100 each. So 16 divided by 2 is, well, 7 is 14. So we would do 8 is that. So if we do 8 contracts at 18 each, we would get paid $144. The basic way to make money on this idea is that SPY at the price right now it's 450 does not reach the 468 price point. And if it doesn't reach that point, I would get my money back and I would sell these contracts for 1 cent each. So I would get paid for that, and that's the basic idea. Same thing on the other opposite end. But our risk here, we could actually check by looking at sell calls. We could look at the data, the details here. Look at the delta. The delta pretty much says right now it's saying that we're at an 11% risk of this going in the bad direction. So we are 90% win rate at this price. But I can't do that call right now because I have one open. I can do that credit spread right now because I have one open. And I'll show you guys my credit spread again to exactly show you how it works. It's the same exact thing, but we'll look at the 456 and let's see what the deltas are saying. So the deltas are saying that I'm at a 70% chance of winning this contract, and I'm at 30% chance of losing this contract. That's not favorable odds for me. I'd rather be at a 10% or 90% win rate or a 95% win rate, which is usually what I trade at. But right now we are doing pretty bad in this contract, which is not fun at all. But hopefully SPY doesn't end up going over 456. But other than that, we're still been selling these Coinbase calls. Coinbase has exploded recently, so we can't continue these calls in the future because now we're gonna be spending way too much money on these Coinbase. We so well we could sell. We're on our puts actually. They're puts, not calls. Because now if you're selling a put on the next week, we're usually trying to collect $50 for this, right? If I go down to $50, we're paying $87 for this contract. Well, that's 8,700 for this contract, and I don't know if I'm a fan of that when Coinbase has pumped way too high recently. Look at this weekly thing; it has pumped way too high, and at 72, I was like, okay, that's even high then at that point, but yeah, I don't think I'm gonna be looking for another stock to make our $50 a week. And also, this Coinbase stuff is what we've been doing here is what we've been adding onto this list, which is currently we're adding like the amount we're profiting off of Coinbase, and we're adding it to this amount here. Then we're reducing how much we're paying for buying it in the sense. So we're trying to make as much money as possible here, and we're also trying to extend our forward contracts with that amount that we're making here. So if I extend this contract from, for example, 13.5, I extend this contract up to 14, I would have to spend at least like 50, 40, around 50 to $40 on that contract. So if you make $50 on Coinbase, I can make this to 14. And that's a good thing because we're at 114 and two 13.5s. Well, technically, three 13.5s and 114. We started these contracts at literally like, I think 11 or 11, 12. I think we started these contracts at. And now we're waiting for Ford to basically go down so these contracts go up, go down in value so we could collect. We're also trying to extend this 14 to eventually 15 or 16, where then we could just continue making profit on those covered calls. Yeah, guys, that's pretty much the portfolio and what we've been running. And here's all the shares I own. I currently want to get rid of all of these shares on top, which is the Fubu, Riot, Hood, and more Riot. And I add Coinbase here just in case if I ever have to buy it. But hopefully I don't, and we have to look for different stock anyway. And then here is our Ford stuff down here, where everything we've made on Ford currently. And also our Bank of America. I actually don't have a Bank of America contract set, so let's look at Bank of America and see if we could do a month out on Bank of America. So if we go BAC, I don't have a contract actually on it, so we have to actually re-up our contract, which we would trade options, then we would sell call. We want to do probably a month out, so let's do August 11th. Let's see what we could get for August 11th. So I would take this 13. I'll take this $7 here. Review it. Likelihood to fill. Let's do 1. Let's review that. Let's go through and do that call. Let's see if it goes through. It went through, so now we'll add here. We'll add a premium plus 0.07, and now we're positive right now for Bank of America, which is nice. But we also collect that money to then further on our idea of buying more shares in the future. Our overall goal is to get cash up to $5,000 and then start buying more stocks after $5,000. We would buy more of our big list here of like FitB, Intel, HPQ, USB, Main. We would want to buy more shares of these stocks here, basically so we could do cover calls on these also, plus collect dividends is the goal. For now, guys, thanks for watching. I'll see you all next time.